Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, today we heard from Fed Chair Jerome Powell, and he made some very bullish statements. In fact, they were very dovish. Now, we know over the past couple of years, we've been tracking that the Fed was going to go from quantitative tightening to pausing rate hikes to then start cutting rates. And we've been in the rate cutting cycle, obviously, for over a year. And now the Fed has started cutting rates again. And there is an estimated 2 more cuts for this year. Well, Jerome Powell today hinted that they will start ramping down quantitative tightening. So that's very bullish. It means at some point they are going to return to quantitative easing. The exact language he used is maybe approaching end of the balance sheet contraction in the coming months. You don't say, especially with, I spoke to you guys about the hiring numbers, the job numbers, and they were at the lowest since 2009. So the Fed's mandate is, of course, to keep inflation at a reasonable rate and, of course, keep employment as high as possible. So all these things are coming to a head here where the Fed is cutting rates. They're going to probably have to go back to QE. I don't know when that happens. That's the tricky part. But the markets, which are forward looking, just need to know that is down the line. That's all markets need to know, because the markets, people know the fiat system, especially smart money. They understand this is a cyclical debt-based system and they have to keep printing to keep this going, right? They have to keep raising the debt ceiling. They have to lower the rates to finance the debt. And of course, to pay for all this stuff, right? I think we've talked ad nauseum about this, but just for the new folks, I just want to recap. So this is very bullish. One thing, I'm thinking about is, could we have a blow off top, markets crash, and then the Fed steps in with quantitative easing? That's a possibility, or it happens before. I don't know, but nevertheless, you guys know my thesis. I believe we are still in a bull market based on multiple data points and factors, which I believe the higher probability, once again, is for the bull case than the bear case, because there is a bear case. I'm not ignoring that, but I think there's too much on the bull side, and I do believe we still have the blow off top to go for this market. And right now it doesn't look like that, but the markets are chopping. Expect more chop. One thing that's interesting, the whale who shorted maybe off of insider information before Trump's announcement and made tons of money has closed his short. That's a very good sign, right? That they recognize there's not any more downside here. Let me close this short, because we could see a bounce very soon. And like I said, lots of chop here. I think the markets are still trying to come to grips, and the dust is still settling after what happened this past weekend, because it was so crazy. A bullish indicator is inverse Cramer, of course. Jim Cramer today was publishing or posting a lot of bearish tweets. First up, he said, the hope we can take the air out of the quantum slash nuke slash crypto and put that money into real economy stocks. If it can be done seamlessly, then we will be fine. And then he also posted the following. It's finally happening. The crypto slash speculative tail is wagging the S&P dog. This is what I most feared these last few weeks. So remember, he screwed us big time when he was pumping crypto at the end of September, right? He tweeted out, buy crypto. He went on CNBC Fast Money in the morning, which he typically doesn't do, saying crypto's great. I would buy Bitcoin. It's the debasement hedge and all that, right? We ran up and then boom, massive crash. Inverse Cramer, right? Now he's bearish. Now he's saying, crypto's not good. Suck all the liquidity out, put it into other stocks and so forth. So if he's bearish, you know what's coming. I think the bottom is going to come very soon, and I think we're going to rally. We just have to be patient. I think multiple factors are lining up here. I've been sharing that with you guys over the past couple of days, such as the tariff situation wrapping up, getting resolved, or Trump delays them even further. The government shutdown, the government reopens, right? That's a big narrative for mainstream media and the masses. In addition, the crypto market structure bill gets passed, and the Fed continues rate cuts, and the SEC approves altcoin ETFs. Those are some big items. And in addition, as I shared in yesterday, Larry Fink, the CEO of BlackRock, is on his media tour again. And if you are a student of all these things that are happening in the market, I've often stated that when he's on TV pumping crypto, talking great about it. You should invest in it. You know what's going to come. Larry's setting up exit liquidity, right? I don't make the rules. They do this on Wall Street for stocks and much more. So it is what it is. We can't control this, but we want to ride the wave of the smart money wave, if you get what I'm saying. We don't want to be part of the dumb money crowd. So Larry Fink was on 60 Minutes, right? I shared that clip with you guys yesterday. He was talking great about crypto, buy some Bitcoin. It's a great investment. Today he goes on CNBC and he says some even more bullish stuff, such as we're just at the beginning of the tokenization of all assets. This includes ETFs. He said regarding his new positive statements around crypto, he says, I grow and I learn. Let me play the clip for you.
I do believe we're just at the beginning of the tokenization of all assets, from real estate to equities to bonds across the board.
It's very loud here.
It is very loud.
But it's good. Capital's at work, Larry. You like that.
I love capital at work.
Yeah.
But there's $4.1 trillion of money in sitting globally in digital wallets. A lot of that money is outside the United States. If we could tokenize a ETF, digitize that ETF, we could have investors who are just beginning to, invest in markets through, let's say, crypto. They're investing in it, but now we could get them into the more traditional long-term retirement products. So we look at that as the next wave of opportunity for BlackRock over the next tens of years, as we start moving away from traditional financial assets by repotting them in a digital manner, and then having people stay in that digital ecosystem. They can have their cash, and we have the largest cash money market fund that's tokenized called BITL. Our Bitcoin IBIT is now over $100 billion.
$100 billion, I know, from nothing not that long ago.
And 2 years ago, zero.
Yeah,
so
I know. Well, you weren't always a huge proponent of crypto, as we know.
I love it now. But I grow and learn.
I heard you say that on 60 Minutes.
I did say that.
Folks, do you see what's happening here? Right? Put your thinking caps on. If the top of the market was already in and we are in a bear market, according to some people, do you think Larry Fink would be wasting his time going on TV to talk his book? Think about it. No, he knows there's more to come. It could be we're headed to the final leg with the move to the blow off top with all the factors I listed, right? So he's there talking his bags, pumping the market, getting people to, getting to crypto. You guys know how this all works. We're going to ride that wave. We're going to look at the top signals. We're not going to be able to call the exact top. No one can do that, but we're going to look for the top zone. We're going to look at the multiple data points and factors, and I'll be sharing that with you guys. Larry also made a statement with regards to regulatory clarity and saying the U.S. needs to accelerate regulatory clarity and investments in digital assets innovation, AKA the Clarity Act is in the Senate, and the Senate must and will pass this bill. If Larry and BlackRock want it, it will happen. If you know how the world works, if you know what BlackRock is, you know it's going to happen. So folks, as I've been saying, not only these factors, these are like the icing on the cake with what's happening, but the data points show we're still in the bull market. So I believe we still have more upside here. Now, this episode is brought to you by VeChain, which is one of the top layer 1 enterprise blockchains out there. Many big brands and companies are building on the VeChain blockchain. They're building Web3 technology and much more. I've been a VET token holder since 2018. I'm bullish on this project. And some of the key features of the blockchain is it's secure, affordable, scalable, fast, and sustainable. Some of the brands VeChain works with includes BMW, Walmart China, Givenchy, PwC, Boston Consulting Group. They are also partnered with Dana White in the UFC, doing some great things. Dana White most recently said he bought over $1 million in the VET token. And VeChain also recently added staking via Stargate. So this is a great project. Like I said, I am invested in it. So if you'd like to learn more, go to vechain.org. The link will be in the description. Now, folks, look at this news. U.S. representative seeks to turn Trump's 401k crypto executive order into law. So could we see this pass this quarter? Because this would be very bullish, allowing more capital to come into the market, obviously from the retirement accounts, right? So this could be a big bullish catalyst as well. So a lawmaker in the U.S. House of Representatives has reportedly introduced a bill that will codify make into law an executive order by President Donald Trump allowing alternative assets such as cryptocurrencies to be included in 401k retirement accounts. Republican Representative Troy Downing introduced the draft bill in a House Financial Services Committee that would give Executive Order 14330 the force of law, Politico reported on Tuesday. The order, which Trump issued on August 7th, says every American preparing for retirement should have access to funds that include alternative assets when deemed appropriate by a plan fiduciary. So this includes crypto and other things. So this is very bullish if they are able to get it into law. Now, something that's interesting, Elon Musk, who we know he's bullish on Bitcoin, Ethereum, and Dogecoin, and he loves Dogecoin, right? Tesla and SpaceX both hold Bitcoin on their balance sheet. Well, Elon's been tweeting a bit about Bitcoin recently, or replying to threads on X, and the user Zero Hedge on X was talking about the debasement of currency, and talking about why is gold / silver / Bitcoin soaring? It's the debasement and much more. Elon says that is true. That is why Bitcoin is based on energy. You can issue fake fiat currency, and every government in history has done so, but it's impossible to fake energy. So Elon starting up his Bitcoin crypto talk here. You see how multiple factors are aligning up here, right? And we've seen Elon come into the midst of bull markets and start pumping things. So I'm not saying he's going to do the same thing he's done in the past, but we know he's bullish. He clearly holds the assets. His companies have Bitcoin on their balance sheet. So let's see what he continues to do here. Now, some very big Chainlink news. Many of you know I hold Chainlink in my portfolio. I am bullish on this project. Well, look at this news. S&P Global and Chainlink launch on-chain stablecoin risk assessments. So this is real-world adoption here, right? The S&P Global has nothing to do with crypto. It's existed before crypto, but clearly they are integrating and building crypto products and features, and this is all the things that exist for the TradFi assets. So it's amazing to see what's being set up. So S&P Global Ratings has partnered with Chainlink to publish its stablecoin stability assessments on chain. The collaboration uses Chainlink's institutional grade data link Oracle infrastructure to deliver S&P's independent stablecoin risk evaluations directly to decentralized finance applications and institutional systems. The SSAs rate a stablecoin's ability to maintain value parity with fiat currencies on a scale of from 1 very strong to 5 weak. While not formal credit ratings, the assessments analyze key factors such as collateral quality, liquidity management, and governance controls. So amazing to see the infrastructure being set up here for the crypto asset class, and great to see Chainlink getting adoption. And once again, I'm a holder of the token, so very excited about this news. Now, look at this. New York City mayor establishes a digital asset and blockchain office. So Mayor Eric Adams announced the establishment of the Municipal Digital Assets and Blockchain Office in a bid to cement his crypto agenda in the final months of his term. In a Tuesday notice from the mayor's office, Adams said he had used an executive order under his authority to create the Office of Digital Assets and Blockchain Technology. Moises Rendon, who has worked as a digital assets and blockchain policy advisor for New York City since April 2024, will head the newly established office. So this is really great. Here's a quote. "Our city has always been the center of innovation, and we're embracing the technologies of tomorrow today." Folks, every major city will do this, every country, of course. And here's an example of countries. Japan is working on new rules to crack down on crypto insider trading. Boy, I think we need to do that here in the United States after what happened this weekend, right? I think you all would agree with me there, because I'm telling you, that whale who put that short in had insider information. The timing, the day before Trump's announcement and so forth, so something fishy there. So Japan's securities regulator is reportedly set to introduce regulations to ban and publish crypto insider trading, bringing it more in line with how the country handles stock trading. So this is very good news. More countries, more places need to do that. Like I said, even the United States. Look at this news. Brazilian stablecoin opens door to the country's double-digit yields. So, folks, crypto is a global asset class. We are seeing across the globe adoption, regulations, new products, and innovations happening. It's so exciting. And, this is the first truly global asset class. I know some folks will say, Tony, what about gold? Yeah, gold was for a while, but it's not, it was pseudo global because you can't track it real time. You can't verify the supply. It's not instantly settable. It's not portable. It's not easily divisible. So, crypto. No other global market is like crypto, right? That's why you're seeing Larry Fink and all these guys are saying, oh, we need to put everything on the blockchain because they're trying to make it like crypto because that's the future. 24/7 trading, 365 days, global markets. We've talked a lot about this, so you guys know what's coming. So Crown, a Sao Paulo-based fintech company, has raised $8.1 million to launch a Brazilian real-dominated stablecoin designed to give institutional investors access to Brazil's high-yield fixed income market. The new stablecoin called BRLV could make it easier for global investors to tap the country's double-digit interest rates, which are often difficult to reach due to local regulations and capital controls. BRLV is fully backed by Brazilian government bonds, which offer yields far higher than those in more mature economies. So, folks, I've been saying it nonstop. The future economies, markets, and governments will all run on blockchain rails. Book it. It's what's coming. Your identity, voting, your finances, your payments, your banking will all be on the blockchain. And we're seeing this being set up. All the major banks, payment companies, all these folks are getting ready to do it. So it's incredible. It is incredible what is happening. That's why we're here taking our bets, right? This is an opportunity of a lifetime, folks. And for the first time in history, you can partake. You don't have to be an accredited investor. You don't have to be part of a hedge fund or part of a good old boys club, right? You can buy $10 of the token. And that's why we had, the past 4 years, the attack on crypto because the banks lobbied Elizabeth Warren and Gary Gensler to attack and kill these crypto startups, try to stifle crypto because it's taking money out of their pocket. You don't have to go to Goldman Sachs anymore. You don't have to leave your money in a checking account and get BS or savings account and get a BS interest rate. You can put your money to work at BS staking or stablecoin yield and earn a higher reward, right? So that liquidity, that money, that capital that was going to these banks now going to this new asset class. And of course, they couldn't touch it because the legislation wasn't there. We see now they're starting to develop and do things. So we front ran them. And of course, they called up their pals and buddies in DC and Elizabeth Warren and Gary Gensler. And that's why you saw all the unlawful activities by Gensler, the lying and breaking the law and much more, and sending out Wells notices and lawsuits left and right and much more to people who were doing great things and who are good actors. But he left the bad actors to do their things and collapse, right? Because that was all part of the plan. So, folks, let me know what you think about this news. Leave your thoughts and comments below. If you appreciated this content, please be sure to support the podcast by subscribing to my free email newsletter. It's on Substack. Link will be in the description. I put out a write-up every week, just once per week, so I don't spam your inbox, but it's packed with a lot of value. Also, check out my book on Amazon. It's available in paperback and digital, and my course at mycryptocourse.com. This is a comprehensive course that teaches you everything about crypto, so check it out. Folks, thank you so much for watching and listening. I appreciate you all, and I'll talk to you all later.